Good afternoon, traders. This is Christian Farmers, Traffic Trade Group, and this is your end of day market recap for Thursday, the 24th of August. So I will get to all the price action for the day. I mean, what a crazy reversal day that was. I will discuss a little bit about what I think kind of happened with Nvidia for the day. And then we will go over some technicals to watch in the indices. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving it any advice or recommendations. So why don't we start with that, because it's such a big story for the day. You know, this Nvidia move today, right? This is one of those situations where I think it helps to put things in a little bit of perspective. I've seen this a couple times in my, trading career where, a company, well, probably more than a couple times for this situation, but a company will report really good earnings and the stock actually goes down on the day. I actually have an example from a couple weeks ago, which I'll show you. But it's also, it doesn't have to be a company that reported good numbers. I've seen it in my Wall Street career too, where, the economy, it could be a jobs report that's really strong and the market sells off on that, right? There's a lot of dynamics that are going on, and it's about expectations, right, about what that report was going to be. And also it's a lot about future expectations. Remember, the market is always, in my opinion, forward looking. So with any earnings report, right, when you get the earnings per share, right, and the sales of how they executed their last quarter, it's just that it's in the past. Now, of course, Nvidia and a number of other companies this quarter put out good guidance, but it's just the fact that the question could be, is this the best that it's going to get in the near future for this company? And I think that's why you kind of have the price action that you had today. Also, the name really ran up into the quarter, into their earnings report. We've seen multiple brokers up their price targets, and a lot of times it's buy the rumor, sell the news. It's one of the things that that I talk about, like in the Tribeca Trade Group trading room, as well as I talk about it in these end of day videos. That it's a principle that you will find over and over in your trading career. Is a lot of times the better trade is buy the rumor and sell the news. This took a little while because I tweeted this out yesterday during the day, and you could have said, hey, he's wrong. He tweeted this out about 12 o'clock yesterday and the market continued to rally. But and again, like today, you could have taken profits at any point today in something like this, or in some other names. But that's a lot of the situation when somebody is, when you do get that good news, and a lot of it is priced into the stock. Why I'm showing the chart here like this is because it may give you a sense a little bit of how much the stock has gone up this much. You're also dealing with a company that is not cheap as well, right? The stock, remember where this was in the beginning of the year. This is a $180 stock. It was a $180 stock in the beginning of the year. It's now $470. So there's a lot that's been built into this, into the price. All right. So that I think is, is important to realize. I'm going to talk about, so going forward, and again, this is something that I tweeted out earlier, but I said, watch this 478 level, right? Even if this thing kind of sells off, right, it might pick up buyers at some point along this along the way into the top of value. It didn't do that today, and I think that's because it's just an overcrowded trade and there aren't any new buyers at this point. All the hedge funds, right? We've heard a lot about, like, for instance, like Stanley Druckenmiller. He's been in this stock from the very beginning. He doesn't have any more shares to buy, I would think, right? He's going to be selling at this point and taking profits. And you have to think about, he was one of the first big institutional funds that got into the stock this year, I believe. Right? I don't know the exact timing for all these things, but I know he was on the early side of getting into this name. But there's been many other hedge funds and institutions that have gotten into this name throughout the year. Do you think that they're going to be buying the stock up here or taking some off the table so that they can buy a little bit cheaper next time? Right, that I think putting things in perspective like that might help. All right, let's talk about what happened with the S&P today. And by the way, like, this belongs to the group, the NVIDIA belongs to the semis group, and I think it makes sense to look at that chart. You're going to see this as I go through chart after chart here in this video. You're going to see this all over the place, right? This is what's known as a rejection, right? And the rejection happened, right at the bottom of the value area. Also the 50-day moving average too, right? That's overhead supply. We talked about that. Now, I'm not a crystal ball reader. I didn't know that things were going to get rejected this severely, but I mean, that's a really hard rejection there at that 152.76 level, right? That's basically, hey, so far all of this has been a bounce, right? All of this has been a bounce once we broke the 50-day moving average. This is and I talk about this a lot. This is the hard part, right? The easy part is the bounce, is the oversold bounce. The hard part is where you're coming back into that breakdown level, breakdown area, which was the bottom of value for the month of August. So that's SMH. And again, it's not a pretty picture. And when we look at the S&P, which I'll go through first, I want to talk a little bit about something like I don't talk about that much in these end of day videos. I talk about it in the trading room quite a bit. But when the day started, right, and as the day unfolded, right, you get hints about what the day might be like. One of those things that we look at during the day is what's called market breadth, right? And we have our own like in-house indicator that we use that looks at up volume versus down volume, right? And it gives you a sense of basically what's going on under the hood in terms of where the volume is. Are there many more names that are seeing down volume, right? That are being sold or are being bought. And you could see like this. So this is on the bottom of your screen, but once we open up and it's like -2, -3, and we just continue to go down that way, that you've got some selling pressure that's on the tape, right? And vice versa. When it's positive, that there's some buying pressure, but it really can kind of give you a hint, especially as you get through the first like 15 minutes of the day, what basically is going on. And it's very important. I hear this a lot, and I'm just going to mention in this, a lot of people think that they're going to get a reversal once the European close happens. I think people came up with this idea because when going back years ago, right, when there was things like the Grexit, remember that when Greece was threatening to leave the Eurozone, what would happen is the European market would be getting hit pretty hard, right, and it would be affecting the US market. Once the European market closed, and that pressure of what was going on over there was gone for the day, a lot of times the US market would reverse and start to go higher, right? That's because there was specific bad things that were going on in Europe at that point. Fast forward to today, people still use that, and it is important to know when the European market closes, just like because you do see some things happen at that point. Same thing with when the Asian markets close too. It's important to know when that market closes and when Europe markets open, if you're following that early in the morning. But however, you're not going to see these reversals just because those markets close. There has to be some type of news or catalyst. What you see a lot of times, when we're trending down like this for the day and the breadth is really poor, is sometimes you see a little bit of a bounce. When does that bounce occur? Well, it's a coincidence that it happens around the European close, but it's actually, there's a lot of algorithms are used not so much. I don't want to talk about like the predatory nature of algorithms, but really algorithms are used to help execute an order. When I was an institutional trader, one of the most frequently algorithms that I saw that were being used, again, it's to help facilitate an order, right, was the VWAP algorithm. Now you hear about VWAP all the time, like anchored VWAP and so forth. Where this term really came from is This is a trading algorithm that trading desks use to execute an order over a time frame. So a lot of times what people do is they will VWAP, what's called VWAP an order over the day. So they will use the volume weighted average price of the historical pattern of volume for a stock, and that will execute the order over the day in slices, right? So we'll slice up, let's say it's a 100,000 share order or a million share order. So it will incrementally dole out that order, and it will go out to the market and execute, right? And what it will do is it will execute more of the order where there's larger time frames of volume during the day. Now, when does that happen? Well, it happens between, right after the open, once you get through the first 5-10 minutes of the open, right? There's a lot of volume in the first couple hours. So the VWAP algorithm is going to execute a huge, a larger amount of volume then. And then it's also going to do the same thing as we get closer to the end of the day. Where it doesn't trade that much, very little, is during lunchtime between the hours of 12 to 1. Right. So what you often, and this is just one algorithm, but it's one of the most widely used ones. So what happens, right? That algorithm, and again, what traders do is basically will basically just put this in their trading system, and the trading and the algorithm will do, it's kind of like autopilot, right? It will actually execute that order based on what the VWAP curve is telling them to do, right? And the trader doesn't get involved in again, unless they want to either stop the order or start and stop the order to try to improve on a price. But what will happen is, so on a day like this, you will get a bounce, and you'll get that bounce till the volume starts to kick back in, because it's kind of like a relief, right? There's pressure on the market. So it's basically also when thinking about driving a car, right? What happens when you have the accelerator jammed down all the way, to the the pedal to the metal, as they say, right? You're putting so much pressure, and then as soon as so that's when the algorithm is trading, right? When you take your foot off the accelerator, what happens, right? The car begins to slow down very quickly, right? And that's the same thing, right? You're moving very fast. You take the foot off the accelerator, the algorithm stops trading a bit, and you get this relief bounce, right? Now, sometimes retail traders, well, I shouldn't say retail traders, all traders will say, hey, look at this bounce that's happening. And they fail to recognize the mechanics that are happening here is that there's no volume, and the accelerator, there's no longer someone pressing down on the accelerator. Now, what happens once you get past that 12 o'clock hour and start to get into the 1 o'clock hour, now the accelerator is being pushed down again, right? And hence the price begins to fall back down, right? And a lot of times that's what you have on days like this. Now, again, there's all types of other trading algorithms, and everybody likes to talk about 0-day options and all that stuff too. But I know that this is something that's been occurring for a long, long time. All right. So again, the conclusion here is, don't and I mentioned in the room, in our trading room, said if you're going to try to scalp, be mindful that the direction of the trend, there's a high probability that that's going to continue to go in the direction of the trend for the day, which was down, right? And you'll see this on up days as well, right? Depending on how severe the pressure, and that's where it comes to the market breadth. So that's sorry for the long-winded explanation there, but I hope these things help. Now, let's zoom out a little bit here, and let's look at the 1-hour chart and what happened here in the S&P, right? Well, this isn't, sometimes these levels aren't 100, like your price isn't going to stop exactly there, but notice we almost got to the top of value and we came all the way down to the bottom of value. So we'll see. I mean, 43.92 is something that I think tomorrow, and you could see we're trading under that, but we have Powell that's speaking tomorrow at 10:05. You might get some more intraday volatility, right? The Qs, which I find more interesting, and this really kind of fit the volume profile perfectly, and the value area, but this was a rejection, You know, it was a rejection where at the virgin point of control, which is where a huge amount of volume has previously occurred. And this is overhead supply, right? So this is where people have been stuck in trades, and it gets up to a certain price and people are like, hey, great, I got a gift here, right? I'm going to get out, you know, where my average price could be, right? And that's basically what happened here. People really took advantage of that as a opportunity to sell. Now look at where we are, right? We're back at the bottom of value, right around 360, 62. And we'll see if that holds tomorrow. We could get a little bit of a bounce from that. Price doesn't have to stop here, right? It depends on who's in control, the buyers or the sellers. Now, generally, when you see a candle like this, right, this just like we went over with a couple other charts here, like for example, the semis chart, right? That's a full-on rejection, right, of the 50-day moving average and the bottom of value. Right. So anytime that we get upon these levels, either whether it's a virgin point of control or where it's bottom of value, my general thought is you wait to see what happens there, right? You wait because you don't want to be the first buyer or seller, right? You want to see if the institutions are going to find that level as something that where they're willing to buy. Now, again, it's much better to watch this, you know, the 360-62 level than you know, trying to basically figure out where there's an air pocket here. Not to say that buyers can't show up down here, but they're just more likely to come into, you know, where there's significant support. All right, so that's what I'm watching for tomorrow in the Qs. Is this a good looking candle? No, it's a bearish engulfing candle and it looks horrible. So again, it's a full-on rejection, right? Right where the indices basically needed to kind of keep going and you know, pick that up. So is this game over for the market for the year, for the you know, I don't think so. I mean, there's a number of other scenarios that could happen here, and we could come down here and we could test this previous candle and it could be a double bottom. But again, I don't know, you know, I'm basically just saying these are things, a scenario analysis that could happen. We could still make a higher low, or we could really begin to start breaking down here, right? And that's something where I think being defensive really helps, right? You know, support isn't, you know, this is another issue on our hands, is support is all the way down at 332, right? That's a decent clip down, right? So 332, right, is right around like this area in here, right? So this is not pain that I think anybody wants to go through. So you control what you can control, which is your risk. All right, guys. And I would get more bullish if we get back above the 50-day moving average. Now, I will say this, you know, what's the strategy for this market? Well, it really depends on what type of a trader you are. If you're mainly a swing trader like me, it's to really kind of back off, right? And not, and try to, not get exposed to these types of moves, right? If you're a day trader, then you love this market, right? If you could play both sides of the market, and you know, if you could play both to the long side and to the short side, right? This is a market that you're probably loving right now, right? And there's all different types of markets, right? There's times where we go through this where there isn't really a trend and you're really going back and forth like this, right? And that's the best way to handle this market, right? Is to not have any to not have any preconceived ideas and just to basically go with the price action. But in terms of swing trading, very, very difficult market. And there are times of the year, and there's actually years where swing trading is very difficult, right? And you do have to wait until the price action supports that type of a trade. You know, for example, this year, you know, we had a nice defined trend for about 6 months this year, right? Or more than, you know, 6 months. But once it breaks, you've got to know to be on the sidelines and to wait until things kind of straighten themselves out until the trend comes back. And when does that happen? Well, we don't know yet, right? And that's why we're watching all these levels. All right, guys, so that is it for today's video. Again, I spent a little bit more time than I usually do kind of going through some of these things to watch, but you know, my goal is to try to help and to, give you perspective of someone who traded institutional for, a number of years. I used to trade block trades. I used to be a block trader for a couple of years. For a while, I was me and just one other senior trader. So it was just the two of us senior traders executed all of Merrill Lynch's institutional flows, right? And that's that's from all kinds of hedge funds, pension funds, all the family offices, any type of institutional flow. So we handled a lot of volume and a lot of block trading, a lot of risk trading, and that's where I kind of, that's where a lot of my knowledge comes from. All right, guys, thanks for watching. Have a great night. See you tomorrow.